Martin, to bring you in, we had quite a few discussions this morning looking at the EU Biodiversity 2030 strategy and the governance of it, the ambitious targets. We talked about the recovery plan, how it promises to align with the Green Deal, so the role of public finance, and now we're coming to what we can do at the level of private finance and how we can increase the contribution of private finance to nature and biodiversity restoration and conservation. So I think so. Yeah. So we have, I think, a very interesting panel. We'll have an introduction from you, Martin, as to what FISMA is doing in this regard, going beyond climate in the coming weeks and months, and then we'll hear from Leslie Kapin, who's principal at a venture capital firm working with very small companies doing agri-food business differently, and then Thierry. My colleague Thierry, head of research and advocacy at Finance Watch, who supervised a recent report, Nature's Return, will help moderate this discussion. But if that's okay for you, Martin, to jump right in and share what's on your plate in terms of FISMA and the sustainable finance agenda and strategy going beyond climate into these complex areas of biodiversity, ecosystems, and nature more broadly.
Thank you very much, Benoit, and good morning to everyone. It is really my pleasure to be here with you today. As you have seen in our recent public consultation on the renewed sustainable finance strategy, we started to talk about not only climate change crisis, but also about the crisis of biodiversity. And our strategy that we are preparing and that is for adoption before the end of the year will explore not only how private capital should help to meet the massive needs that we need to fill, but also the public funding. I mean, you had a session on that, and I'm happy to say a little bit more words about that myself, but we really need to make sure that the tools that we are using for the private sector are aligned with those tools that we are using for the public sector. Now, in the strategy, we don't only talk about the crisis, we are also exploring possible solutions to the challenges that we are facing. We have obviously adapted the consultation paper in light of the crisis, and you could find several references to the fact that there are links between the biodiversity loss and this crisis, and obviously the climate change. So we need to be very serious about avoiding similar crises in the future, not avoiding, but at least minimizing their impact. In the consultation strategy, we are not yet saying what the Commission will do, but we are already giving you some hints what we are thinking about. And you have seen that we have structured the debate, or at least the input that we are seeking, into 3 clusters. And I will tell you, I mean, where I see the biodiversity angle coming in all these 3 angles. The first one is we need to build the right ecosystem for sustainable finance. And here we are exploring in particular how we can improve transparency. Transparency of companies and financial sector, not only about the impact that the climate change and biodiversity loss has on them, but also the impact of the business activities and of the financial sector portfolios and activities on climate change and biodiversity loss. So here I would like to mention 2 pieces that are of particular importance. The first one is the one that already was adopted at the political level, and that is really a key milestone that has been achieved, which is the disclosure regulation, which is targeted, as you know, to financial market participants. And we are currently working together with the ESAs, the European supervisory agencies, to identify some indicators and some minimum requirements that financial market participants would have to disclose in relation to biodiversity. You have seen that in the consultation launched by ESAs, it's clearly spelled out that the biodiversity issues are principal risks. So these cannot be minimized, and these really have to be taken very seriously. And the ESAs, as part of the preparation of level 2 of the disclosure regulation, will identify several indicators that the financial market participants will be obliged to disclose when it comes to the biodiversity issues. The second piece, I guess that you all are aware that we are preparing a legislative proposal amending the existing NFRD, the non-financial reporting directive, that is currently scheduled for adoption in the first quarter of next year. And there we are thinking very hard how to make certain information obligatory for not only the financial sector companies, but also for the companies that are currently captured by the NFRD. And here, I mean, I have to say that, yes, we have done quite some work on the climate indicators and on climate-related disclosure, as you know. But now it's really high time to move towards the environmental indicators and environmental disclosure. So this is our area of key focus. We are, of course, trying to link our work with the existing environmental or DG environment methodology on organizational environmental footprint and obviously the natural capital accounting. And we obviously need to do a lot of work together. The second area which we are exploring in the public consultation is the impact. We do want to increase the impact and maximize the opportunities for investors who would like to have a positive impact on not only on climate change, but also on environmental issues, including biodiversity. And here the key tool, as you would expect me to say, is the taxonomy. The taxonomy is the tool that clearly determines which economic activities substantially contribute to meeting certain environmental objectives. And as you know, in the taxonomy regulation, biodiversity is one of the 6 objectives. Throughout the work on the taxonomy work on climate objectives, we already identified, I mean, we, together with the members of the technical expert group, a lot of very useful issues that are linked to biodiversity, especially when it comes to do not significant harm. Because you know that the concept that we have introduced and has been ultimately politically accepted requires that not only substantial contribution has to be, that the test of substantial contribution has to be met, but also do not significant harm test has to be passed. And through the work of TEC on climate objectives, there has been a lot of work done in the area of biodiversity, and we do want to seriously reflect that in the delegated acts that we are going to adopt on climate objectives before the end of the year. Next year, before the end of next year, we are going to adopt delegated acts on the other 4 environmental objectives, including the one on biodiversity. So already before the end of next year, you will see that the Commission will adopt the delegated acts on economic activities that substantially contribute to meeting the objectives of linked to biodiversity. Here, I mean, we will set up a platform. As you know, we are going to move away from the technical expert group setup, and we will create a platform. We will launch a call for application for members of this platform very shortly. I mean, it should be normally in the next few weeks. So I will keep you posted once this is done, because we will need experts also in the biodiversity area. I don't want to talk only about the taxonomy. We obviously are also working very hard on the green bonds. We are exploring whether we should legislate on a voluntary standard for a green bond, for the European EU green bond. We will very likely do that only after we will receive the feedback to our public consultation, but there is an a priori bias towards creating this standard at the EU level as soon as possible. And of course, the labeling workstream, the eco-label workstream, we are taking as a priority, because that would be also the vehicle that can connect the agenda of biodiversity and environmental issues and sustainability with retail investors. And finally, and sorry that I'm so long, the third area that we are investigating in the renewed sustainable finance strategy consultation is the area of risks. We do need to do a lot of work that we have not done yet to understand better how the loss of biodiversity affects not only the financial sector, but how this affects the businesses in some of the key sectors. We believe that the externalities and the negative impacts of stemming from biodiversity loss on companies has not really been sufficiently explored yet. These issues are usually underestimated by investors and the financial sector grossly, like they were on climate change maybe 5 years ago. So we do need to really move a needle here, and we would like to put a set of proposals on how these risks stemming from biodiversity loss can be better reflected. Here we are talking about two ways risks. I mean, obviously one risk is how the biodiversity loss is affecting the businesses and the financial sector and the financial stability, but also the risks that businesses' activities impose on or entail for the loss of biodiversity. So, I mean, we need to really look at these both channels together, and for that, the NFRD framework and the taxonomy will be of particular importance. My final point, sorry for being long, so far when we talked about risks, we have looked at the risks usually from the point of view of individual institutions so far. We have looked at how climate change is affecting this particular institution, how this affects one particular investor or one particular bank or one insurance company. But we really need to now move to a more systematic approach. We need to understand these risks and the both channels that I referred to at a systemic level, what it means for the financial stability overall, what it means for the biodiversity loss overall, what it means for the economy overall, and what it means for the resilience of our economic systems, what it means for the business structures, the governance, the business plans. So there is a huge potential that the consultation offers. We would like, obviously, to receive as much feedback as possible. This crisis has shown that we need to do, again, much more work on the resilience overall, not only of the financial sector, but of the businesses' strategies and the systems. So the systemic risk that is linked to the biodiversity loss really needs to be explored more. So I will finish here. I think that I have been more than exhaustive at this point of time.
Hi, good morning. So Benoit, do you want me to go ahead, or should Thierry?
Yeah, perhaps, I don't know how Benoit wants to manage this, but perhaps I could, if you allow me, Leslie, intervene here. As we heard Martin, very interesting indeed, as the policymaker, and you, Leslie, you're the investor, and investor very much focused on impact. So it's I was going to say, in all due respect for Martin and myself, the real thing. So it will be very interesting to listen to you. Maybe I would like to bring in some, I'll put my analyst hat on and sort of link between the policy making and the real world that you will talk about, and give a few hints, of what, how Finance Watch analyzes all this. Perhaps very briefly, I'd like to point out a number of things that have been said this morning on the first two panels. And obviously the first two panels were not about private finance, but I spotted 3, 4, 5 things that were said that were absolutely essential for private finance. We heard something very interesting from Luc Bass and Didier Babin, who said basically that we need to move from cost to investment, in our way of approaching the issue of biodiversity. This is very true. I could not agree more, but, and this links us directly to your work, Leslie, and to the world of private finance, investment doesn't mean it is free, doesn't mean it doesn't have its constraints. It still has its, parameters, and the parameters of investments are really what profit can you expect and what is your analysis of the risk you're taking. So we'll come back to that, because basically we think, so when I say we, it's really at Finance Watch, that what the European Commission and the European Union is doing in the world of sustainable finance is enormous. It's something essential, should be pursued. And, I'm not here to flatter Martin or his colleagues, but it's just something that is exceptional. Having said that, we should not count on private finance to solve all the issues, to be the miracle solutions, and hey, we improve transparency, and we completely agree that we need to improve transparency, and that work is being done. And then, job done, it's finished. No, it doesn't work like that. So this is really what I want to highlight. And that takes us to one thing that Simon Zadek said, which is the difficulty of investors, and in particular, large mainstream investors, to comprehend, to understand what we're talking about when we talk about biodiversity. I'm talking about large mainstream investors here, and obviously, Leslie, you're a different breed, I would say. But that's very important. I mean, I will not give you names, but I've heard very large investors say, it's all very nice, but how do I do it concretely when I have my hundreds and hundreds of billions of euros to manage? I mean, what am I supposed to do? And that's really what we need to talk about. Obviously, Sven Giegold said, we need binding rules. And yes, of course, that's one thing that our report on biodiversity highlights. And one thing to always bear in mind is that private investors adapt to rules once they exist. So, they may agree or disagree, as the case may be, on the rules before they're adopted. When they're adopted, they just adapt. So that's something really important, because you change the rules and then private finance will do its job, because it's their job to take the world as it is and invest. And the last thing that really attracted my attention in relation to private finance, there were so many other topics addressed, in the previous panel, was Josh Ryan Collins said about the need for public intervention to de-risk investment and crowd in private finance. And obviously, that takes us to the fact that all those issues are true of banks and of investors. And I would like to insist on the move from cost to investment, which is of course important, but it's not a complete story. As I said, investment is not free and it has conditions and strings attached. Two things here. First of all, in order to derive profits, to assess the potential to derive profits and assess risk, you need metrics. You need to measure. And this is more or less, if not exactly, what the agenda of the European Commission is. Define sustainability, that's taxonomy. Disclosure, getting the right information from companies, this is NFRD. Define European non-financial reporting standards, and we heard Vice President Dombrovskis, give the mandate to EFRAG to start working on this, and this is great. And another dimension, which we won't have time to go in detail in now, is define proper biodiversity metrics, and that's a big topic. I mean, we all know the sort of catchphrase, which is perfectly founded. There's no equivalent to tons of CO2 for biodiversity, so measuring impact of biodiversity is a complex issue. As complex as it is, we need it if we want private finance to step in massively. But the other dimension is not only the measuring and the quantifying, it is also the issue of scale. The issue of scale is really important because, first of all, when you think about private finance, you have to distinguish between banking and investors, capital market investors. As far as banking is concerned, you're mainly talking about restoration projects, thinking biodiversity obviously here, restoration, conservation projects. And if I can share an anecdote, but which is so telling, I was, when we wrote that report of ours, we were interviewing a banker specialized on lending to restoration projects. And you couldn't find someone more convinced than that it needs to be done. It's his job, total energy to achieving that. That person was telling us that the typical project takes 2, 3, 4 years of work before it's completed. And it's typically on 2, 3, 4, 5 million euros of financing. And you realize immediately that 3 years of work for 3, 4, 5 million euros of financing, if you're really convinced and you're a bank dedicated to doing this, then you do it. But if you're a large mainstream bank, the ratio of the work you have to put into it and potential return is not great. So it's fine, it's happening, it will continue to happen, but will it be developed or rolled out at the scale where we need it? Doubtful. The other thing is, if you look at the very same issue from an investor standpoint, asset managers have their constraints. Here again, we don't have the time to go into the analysis of how capital markets and capital market investing works, but they have a number of constraints called size, liquidity, and they need liquid investments, and they need sizable investments. And then we have an issue of scale as well. because most of those products, and I'm mainly thinking of investors who invest in listed securities here, many of the biodiversity related projects just do not fit the criteria. Of course, there is an exception, which is investing in listed companies that, after proper ESG analysis, meet the right criteria because they respect biodiversity. And there's some excellent work being done by very, very serious investors on this. But let's face it, we're not yet at the stage where this will make a real impact on the issue we're talking about. This is why, and I'll be very brief and I'll stop in 2 minutes. This is why certainly at Finance Watch, we believe very much in something different, but I don't want to anticipate, what Leslie probably is going to be talking about, but we certainly believe in small disruptive projects. And why are we saying this? Because our conception of finance is very much a finance based on relationship between an investor and investee and an alignment of their interests. The second thing is we feel less transactional finance, if I can call it like that, sort of automatic investing given number of ratios are met, and more of a thorough review and assessment of investment projects, and then, investor and investee work together. And if you want to do that, well, there's no miracle. You need to move away from today's world. So the notion of being disruptive is, we feel, embedded in the notion of investing for impact on sustainability and on biodiversity. Once we've said that the current economic system is not sustainable, by definition, if we continue to invest in today's world as it is, it won't work. And this is a huge discussion. I'm sure Finance Watch will organize events on this. This is a huge issue for such massive financial practices as passive investment, index replication, benchmarking with broad market indices, because by definition, if you replicate or you benchmark to broad market indices, which are invested in a non-sustainable world, well, guess what? Your impact on sustainability is going to be somewhere between limited and zero. So this is really our conception of the issue. Please push me, contradict me, and now I think it will be very interesting to hear what Leslie thinks of all that from, I would say, a real world standpoint. Leslie?
Thanks a lot, Thierry, and thanks a lot for inviting me today. I mean, I'm very glad to get the opportunity to discuss how the private sector contribute to sustainable finance and how we can help scale up investment in positive impact businesses. Just really briefly to explain, so Astanor Venture is an impact venture capital firm investing in the agri-food tech sector, and we're based in Brussels. So as you all discussed at length this morning, I mean, the whole agri-food system, same as biodiversity, is in crisis. And what we strongly believe is that to restore the broken food system, solutions are needed at scale. Like small incremental change will not solve the problem. So we cannot count on large players within the agri-food field, such as the Nestle or the Danone, which have too much history, which are too heavy and can't move fast enough. What we need small players, we need acceleration. And technology is key to address this crisis, as we really need systemic disruption. And as we know, consumers are acting. We are all looking for more transparency and for a fairer and more sustainable food system. In this mindset, what we are looking for at Astanor, we're looking for European startups that really disrupt the way we cultivate, harvest, transform, transport, and consume food. So what I mean is that is the entire value chain, the food value chain. So from the soil to the guts, so the health as well aspect. So clearly, the farm to fork strategy that was published last week is fully aligned with our investment philosophy, and to a certain extent, for sure, to the biodiversity strategy, which is the focus today. So to let you know a bit more where we are today, we're expecting to close our first fund, which is like will be between 150 to 250 million euro. I mean, clearly compared to the amount that were mentioned earlier today, it seems like a drop in the ocean, but I will say that it's a really important drop that will make the difference. And the focus will be to target 20 to 25 companies. To give you a quick idea of the type of companies I'm talking about, there's one called Insect. So no surprise there, it's a company that farms insects. It's a French company that raises vegetarian insects on a very large scale, and the protein is used for the animal food market and especially for farm fish. And the company Insect has many positive impacts, and one of them is to prevent simply the depletion of ocean fish stocks. As we all know, fish meal is the primary food source for farm fish, and it's an ingredient in crisis. And that's only one of the positive impact of Insect. Thinking as well of the chemical pesticide that was mentioned several times today, as per the biodiversity strategy, we are currently investing in a new Irish company, so I cannot disclose the name at this point, but they've developed an advanced crop spraying technology that is leading to 50% less pesticide use and 50% less water use. So that to do exactly the same job. So just to give you an idea that by investing in such small companies, we can make the difference as well. So when we look at all our companies, impact and sustainability are fully embedded through the entire investment process. We are analyzing all the impacts, and as well as Martin mentioned earlier, we are looking as well at all the negative externalities. We're not only focusing on positive impact, we want to understand how could this company harm the business, the environment, the biodiversity. So we will be assessing the entire big picture, not just focusing on, oh yeah, this company can solve the pesticide issue, but what are the negative impacts, and how can we make this company, in fact, that help on reducing pesticide, but even like making it better, like how can they help to no more pesticide at all, how can they help to get to this direction? So I just don't want to spend too much time, and I think it's better if we have some questions and answers. But just one last point I want to mention, and is that the transition to sustainable food ecosystem has begun, and we are fully convinced that we can deliver financial and environmental return. We don't have to make a compromise here. We can achieve both. And to do that, we have just to invest in resilient, mission-driven startup. And I know resilience was mentioned several times today, and we've seen that in our portfolio. I mean, we've got 10 companies at this point, but they have been resilient through the crisis. And some of them have performed really well, especially because they were made for this type of crisis. I mean, just really quickly, one of them is La Ruche Kidiwi, which is a French company again, that connects the farmers and the consumers. So it's a platform that connects directly the farm to the fork. And this business has proved to be fully resilient and helping the population. So just the point saying that we believe that financial and environmental return can be made without any compromise, and that resilience is key.
Thank you so much, Leslie. This is extremely interesting. Can I push you on one particular topic? Is how, in a fund like yours, do you reconcile your impact objective and your return objective? Obviously, you're in the business of deriving a profit, well, a return on the funds you invest. And are there times where there's a contradiction, difficulty to reconcile the two? What's your policy in terms of, because I was mentioning in my analysis that's one of the limits of private finance and one of the constraints in any way. So how do you reconcile that?
Yeah, sure. I mean, I think the focus is to find the right team, the right management. We are looking at mission-driven companies. I mean, the theory of change is embedded into their DNA. So they want to make a difference. They're not there, I mean, for sure, they're there to make the business as well. They have to leave, they have to hire people, they have to, and because they want to scale impact, even more, I mean, they have to grow as well. But I think the fact that we are looking for the right management team that is impact driven will lead us to be able to have both impact and finance returns. I mean, clearly the exit situation can, could be seen as difficult. Yeah, do you want more impact or do you want more return? But I think we can achieve both. I mean, we haven't had any exit yet, but being an impact investor, investing in impact-driven companies, I think we can reconcile both return and impact.
Thank you.
Thanks a lot, Leslie. Back to Martin, and then I'll also leave the floor to Sandrine with a few concluding remarks. So Martin, we just had a very interesting sort of picture of both the potential limits of private finance. I also want to echo some of the questions in the Q&A from the audience, which turn around the fact that indeed we have an example we just had heard from Leslie of the positive role that finance can play, but unfortunately and it can be disruptive, so have a systemic impact at some point, but still the very niche place that has in the ecosystem, and on the contrary, the sort of massive mainstream detrimental effect that finance has. And so again, in the Q&A, we saw questions about what can we expect in terms of progress on the brown finance front, so maybe the brown taxonomy and the risk aspect for sure, and also how we can expect, but Thierry mentioned that more of a move towards binding regulation, so integrating, including maybe on the brown, some binding measures into existing regulation, including maybe prudential. And yes, when we have the discussion, you have to expect it again in the Q&A, questions around the role of behemoth, almost the opposite of what Leslie is doing, like BlackRock, and how do you constrain? Thierry mentioned passive investing, but also how do you limit their role, which is not always very positive in this space. So Martin, back to you.
Thank you very much, Benoit. Well, I mean, we don't have, I mean, I have some views, but it would be a bit premature to tell you what these views are before we finalize the public consultation. But I do believe that we need to look at both issues at the same time, how to maximize the positive impact, and at the same time, how to avoid harm. On the first, I do agree with Thierry, that's my personal view, is that relying on the private sector without putting in place appropriate framework with appropriate incentives might not lead us very far. Because we have also, I mean, having learned the lesson from the kind of climate change story, I mean, it takes time for people to integrate these issues in their decision-making processes. And also, I mean, the tools and frameworks that we are developing still, I mean, that also takes time. And, you know, we talk about the metrics, the measurements, we are not yet there. So we cannot, I mean, I'm not blaming anybody. I'm just saying that relying on the private sector now to fill the gap and to fill all the needs that we have without putting in place appropriate incentives would be a bit short-sighted. That's my personal view. And for that reason, in the consultation, we are asking questions whether we should also attach some incentives in our public policies that the EU or member states are pursuing. I mean, in some cases, simply the market failures can be such that there needs to be an impulse from the public authorities. So again, I'm not preempting what these impulses or incentives should be. We are just asking the questions to you. And if you have strong views about that, please let us know. But I do believe that especially in the area of other 4 environmental objectives that have not yet been embraced by investors and the banks and insurance companies to the extent desirable, we do need to provide some incentives and some structures in our policy making. The second point, and that's basically the key elephant in the room, and frankly, I mean, I'm reading more and more about biodiversity and environmental issues than about finance these days. I am very worried that the trend of deterioration of the biodiversity losses, I mean, is just getting worse every year. I mean, we all know that, but we need to also stop, I mean, not stop, but limit the adverse impact as soon as possible. So as you know, in the taxonomy regulation, we are required as the European Commission to submit a report to the Council and to the Parliament by the end of 2021 on the possible merits of such a brown taxonomy, of environmental activities that would substantially harm, not contribute, but harm environmental objectives, both climate as well as the other 4. And we are asking questions in our consultation. How quick do we need to be? How quick and how ambitious we need to be? And again, I mean, I already referred to the work under the disclosure regulation on the RTSs, where we are exploring already some indicators. We will do that also for the NFRD. But there are different ways how we can limit the harm. And one concrete example how to limit the harm, which I think is very promising, and it is already being hinted to at the tech report on taxonomy, on the climate taxonomy, is to use the do not significant harm principle. Because even for the climate objectives and the climate taxonomy that we will adopt as the Commission before the end of the year, we will already introduce the concept of do not significant harm for the other 4 environmental objectives. And we need to see how we can inspire ourselves from this work that the TAG has done and how we can take it further. So that's also, I mean, that's something that I'm dealing with basically on a daily basis, because we will also need the right experts. We are setting up the platform that I mentioned. So we do need experts also on the biodiversity issues that would advise us what can we do to limit the harm. So maybe my final point, do not harm doesn't apply only to the private sector. I don't know to what extent my colleague Markus Schulte clarified in the morning that in the recovery package that was adopted last week, there have been several safeguards introduced in the package. Obviously, everything is subject to the negotiations, but in the communication, the main communication on the green recovery package, you clearly saw, and I hope that all of you were happy to see, that do not harm should be the guiding principles for any public support provided by the EU. And as such, now we are working with all relevant services to see what it means in practice. Because I mean, one thing is to say it, and it's a very important signal and very important commitment, but now we need to make it operational, and not only for the private sector, but also for the public sector. And we have seen that many interventions by member states were needed and they were massive, but not necessarily everything was screened against the lenses or through the lenses of do not significant harm. So now we have a lot of work. I mean, I have to be very, very honest. We have a lot of work to do now internally as well to ensure that this principle is really, implemented on the ground and in practice. And again, let me repeat, this principle has to be enshrined in the approach by both the private as well as the public sector. And ultimately also member states. I mean, if we are all serious about all the EU strategies, we have to cover all entities, all stakeholders, equally. I mean, like for the climate change, we have very good targets, we have very objective targets, and we would expect that not only EU, but also member states and all financial sector as well as businesses, participants will contribute to meeting these targets. And perhaps we will also need some clarity, better clarity, what it means in practice to meet all the targets that we published in our biodiversity strategy. I mean, we need to translate these targets that we set out in the biodiversity strategy, what it means for the financial sector. We are doing it now for climate, but we have not started to do that for the biodiversity. And this means to look at it both from the positive angle, how these targets can be met, as well as how to avoid the harm so that the situation doesn't get worse. I hope that at least I answered part of your question, Benoit.
Yeah. No, definitely. Thanks a lot. Simon, you wanted to come in?
Thank you. I'll be short because I know we're slammed on time. So actually following Martin is great, because I wanted to both congratulate Martin on something else and kind of amplify it slightly. So the European Commission is the first public institution in the world that is trying to connect the dots between a sustainable finance agenda and a fintech agenda. And Martin has taken an absolutely critical role in that. And the reason it's relevant in this context is because the nature of biodiversity, its very complexity, requires highly sophisticated, real-time, cheap, credible data, and a new generation of financial instruments and markets insofar as aspects of biodiversity are going to be traded in the future. And I'm not going to go into the dangers of trading. We all know what they are. Fintech provides a critical piece of the architecture to enable that to happen. Not only in, for example, ensuring compliance with a biodiversity taxonomy, but think about disclosure. Disclosure assumes that data about companies comes from companies. Biodiversity, never going to happen. 99% of biodiversity data will come from so-called alternate data, which is largely owned by the public sector and generated by the public sector. And that makes the EU's approach to open source data platforms incredibly important in the biodiversity space as it relates to the investment community. So could go further, but won't. The main point I wanted to amplify was the connection the Commission is trying to make between digital finance strategy and policy and biodiversity and sustainable finance, and the importance of that, both in a EU context and in a global context, insofar as biodiversity is going to be either directly tradable or is going to be tradable in terms of the eco services that it provides. One last point on that, and then I'll post back, Benoit. We're beginning to see a new generation of legal identity and rights work in the biodiversity space. It's not a new subject, but we're seeing new work on it. Yeah, and that is absolutely critical as it relates to the nexus between biodiversity and finance. Yeah, that the endowing of legal rights is what creates the potential for liability and creates the potential for underlying markets to emerge that are robust. And so where the EU hasn't connected the dot yet, but could, is to bring into this nexus of biodiversity, sustainable finance, and digital finance, the question of legal rights of biodiversity itself, where there are some really interesting innovations happening in many parts of the world. Thank you.
Thanks a lot, Simon. Sandrine, do you want to come in? We're going to wrap up this discussion, let's say 35, so we run over 10 minutes, so we have another 3-4 minutes left. Sandrine, I want to make sure you have a last word. Martin, if you want to respond to Simon first, or just digest his suggestion, that's okay as well.
Yeah. So I just want to finalize some of my impressions, I guess. Really pleased with the way in which we've now concluded this conversation, because I think we're getting to the core and the heart of some of the key issues. Firstly, Simon's point around the legal aspects of how we actually put a legal right on biodiversity is fundamental. And one of the key questions that we had in our planetary emergency plan when we were discussing with member states was, how do we actually start to put a value on the global commons? Of course, the global commons being some of the greatest biodiversity space and important for the rest of the world. And clearly some member states do not believe that these are global commons, but actually national sovereign rights. And so I do think we need to get very clear about the legal rights of biodiversity within a national scope and also within a global scope. That enables us also to start to have better metrics. As we were saying, we need to start looking at biodiversity, not just in terms of protection, but also in terms of solutions, bio-based solutions. How do we actually put a metric on regenerative land use in the way in which we should start to look as we move from COVID as well? So I think that conversation is also fundamental. What I'm heartened by, and Benoit, and although of course there's a great deal of frustration from those who've been working in the biodiversity space, is myself, coming out of the climate space predominantly, the interlinkages that we're seeing and the breaking down of the silos between the climate crisis and the biodiversity crisis, and the way in which we look at finance and sustainable finance as a tool for both in terms of value generation and a link towards what actually is financeable in terms of shovel-ready projects, and moving forward also with regard to protection, so they'll do no significant harm aspect that Martin has brought up so clearly. Just in the next 2 days, we have His Royal Highness the Prince of Wales working with the World Economic Forum, launching a huge new initiative around biodiversity and bringing CEOs, private sector, the public sector behind the concept of valuing natural capital. And I'll be part of that conversation tomorrow. We always knew that the Prince was very much involved, but you can see all these new actors that are coming forward again and bringing forward new coalitions and new thought leadership. As I said also, the high ambition coalition of member states, in countries across the globe, led by France and the UK tomorrow. They will launch their new initiative to bring people and nature closer together and to very much look at this question of metrics so that we start to evaluate nature as being absolutely fundamental for the well-being and the health of the planet and people. So I think we can be heartened by the movement that we're starting to see across these different systems: finance, economics, biodiversity, nature, and climate, and the way in which we're trying to create a much more holistic approach. Is it enough as we come out of this pandemic? Clearly not. And that is the focus, I would think, of the next type of engagement that we would have, I hope, which is let's get down into nailing exactly what we need in terms of the core intervention points, whether it's debt swapping, as we indicated, as Simon has very much put forward, whether it's some of the key points that Luke put forward in terms of really shifting towards the evaluation of nature as part and parcel of also our financial system and capital evaluation, whether it is through also much larger international interventions with the G20 and the G7 that some of us have also already started. So I think we need to now get more granular in terms of what are those key intervention points from a European perspective, a national perspective, and then a global perspective, and start to create that much more holistic thinking around the role of nature in our economy.
Thanks a lot, Sandrine. We're going to wrap up shortly now. Martin, do you want to say a last word reacting to Simon and Sandrine maybe? And then Leslie and Thierry, if you want to come in, then I'll close the session. We've almost had 100 participants constantly over the last 3 hours, so that's pretty impressive. Martin.
Very quickly, I also would like to congratulate Simon. In fact, I mean, he has been the source of inspiration for our work, still exploratory work, but we do want to have quite an ambitious section in our strategy on the potential of digital sustainable finance. And Simon is absolutely right. We cannot rely only on individual disclosures here. There is too much at stake for biodiversity. So we do need to develop this European data space for broader environmental issues that nobody can really, substitute this individual disclosure. So this is something that we need to work together. I mean, I'm of course noting the other more ambitious proposals. We are very happy to explore everything. We are not saying no to anything. We are at the stage of consultation. So even the most crazy ideas and the most ambitious ideas are welcome, either through our consultation formally, but also obviously we are very happy to engage throughout the consultation period before the mid-July deadline. So any of you who is interested and provide any contribution to us beforehand, you are more than welcome. But thank you very much for allowing me to speak today.
Thanks a lot, Martin. For sure, everyone should be encouraged to respond to the consultation, which I think clearly between the lines you can see you're looking for ambitious proposals to lift this agenda upwards and forwards. Leslie, you want to say a last word?
Thank you very much for having me today. I think it was really helpful, and clearly the venture capital world might seem really far away from NGOs and from policymakers. However, I think we should really work all together. I think we're not so far away. In fact, I mean, we are in Brussels and would love to be part of the discussion, because I think capital venture can play an important role. And as mentioned earlier, small businesses, impact-driven businesses can make the difference. So just wanted to reiterate and say that, yeah, we'll be happy to discuss further.
No, absolutely. Thanks a lot. And I think this ties to what I want to finish with, which is this need for strong disruption, and the fact that actually there is popular demand with citizens, with taxpayers for this transformation of the economy. And you mentioned, Leslie, some of the, again, disruptive small players who seem to also have more trust from the public that they can actually up their game, where some of the, if I dare call them the dinosaurs incumbents, I think a lot of people are skeptical that these people would be serious about this transformation towards an economy that is in harmony with nature. So again, let's aim at solving this sort of bipolarity, as Simon was saying earlier, between popular demand for radical change now, and sometimes within elite circles, this maybe excessive prudence in terms of doing with the status quo, and avoiding actually the necessary disruption. So I want to thank all the brilliant speakers we had today. I'm sorry, you must be frustrated we didn't go enough in depth into some of the topics. That's the constraint of the exercise. I want to thank the attendance. We had more than 200 registrations, almost 100 throughout the event. So I think that shows there's a lot of interest, and for sure, Finance Watch, but also the Club of Rome and many of the panelists will continue working on this with Martin, with the others, to push for this radical transformation we need very urgently. So thanks a lot for attending. We'll be continuing the discussion on social media. We'll be publishing extracts, video extracts from the discussion in the coming days. And so, yeah, please stay in touch and let's pursue the discussion. Thank you.